Good morning, everyone. My name is Dan. I'm with Golden State Finance Authority. I'm going to be your guide today as we go through this presentation on our Assist to Own down payment assistance product. The call is scheduled for an hour, but I can almost promise you that we'll be out of here well before then. It just really depends on the questions that you guys may have. To keep everything running smoothly, it's going to be questions held to the end. And for the most part, you're probably going to see that a majority of your questions are going to be answered at some point during the presentation. We are going to be recording the event, and I'm going to go ahead and try to drop information for you guys into the chat in case you want to refer back to in the future. Most important is going to be the website for where you guys can locate information on the product. Once the training has been recorded, it should be posted online as well as a copy of the presentation. Let me see if I can. Doesn't look like I can add a file to the chat. But again, you'll get a link to this page where you can access any of the relevant program information. And I know that for some of you who might be new to the home buying process, some of the terms that we go over during the presentation might be a foreign language, but I can assure you the process is pretty simple. If you are at all interested in exploring homeownership, what you're going to want to do is reach out to a participating lender that can help you with the entire process. So let me go ahead and begin by sharing the presentation with you. And we'll give it another, 2 minutes. That way everyone has a chance to get logged in. And then we can start. I know it's going to be pretty smooth and quick, and so I'm not too worried about starting a little bit later. So we'll just hang tight and we'll start in just a moment or two. Okay, well, it is a couple minutes after the hour, so in respect for everyone's time, I'm going to go ahead and start the presentation. So I want to begin by thanking everyone for taking time out to join us this morning to learn about this unique product that GSFA is partnering with the County of Shasta to make homeownership more accessible to the residents of the county. Again, my name is Dan Wynn. I'm going to be your guide today as we go through this presentation. Just a heads up, if if you're at all interested in exploring potentially buying a home, what I would recommend is you can reach out to any participating lender on our website to start the process. If the materials that we're covering, seem kind of complicated, I can assure you that the process is actually quite simple, and the participating lender that you work with will be your guide to help you with the entire process. I do want to let everyone know that, you might believe that homeownership is out of your reach, but with programs like ours, you may be surprised to see that our assistance can help you guys bridge that gap between being able to afford the mortgage payments, but not having the funds for your down payment and closing costs, which is kind of our objective to provide that financing. So whether you're thinking about buying a home now or, possibly in the foreseeable future, I do encourage you to sit through the presentation, make some notes if you need to, and then write down any questions you might have so that we can address them at the end of the call. So Golden State Finance is a housing finance authority, and we are a public entity and agency made up of over 40 counties in California. One of those counties is County of Shasta itself. and one of your county supervisors sits on our board. Now, we are partnering with the county because we realize that homeownership, is one of the biggest obstacles that people face when trying to, set roots out in the county. And so we're hoping that this program will help to transform more, prospective home buyers into homeowners for the County of Shasta. Now, this is a unique product because it's not available just to anyone. It's a specific program option that we created with county employees in mind. And the benefits are only available to, official county employees of any of our GSFA member counties. In other words, it's not a program that just anyone can access. It's one of the benefits that you have being an employee of the County of Shasta. So we've been around since 1993, and our primary goal is to provide programs and products that help to promote and foster responsible homeownership. Our programs are combined with mortgage loans to provide down payment and closing cost assistance. We work with pretty much every loan type, including FHA, VA, USDA, and conventional financing. Our programs have helped, more than 87,000 families over the last 3 decades achieve the dream of homeownership. And we provided over $685 million just in down payment. And we're hoping to add you guys to that total. So the reason why you're probably on the call is because, you already realize the benefits that homeownership, has in terms of helping people that own homes. Just some quick stats on homeownership. It does improve the families and communities where the homeownership rates are higher. There's better neighborhood stability. There's increased educational achievement by the students of these families in these areas. Being a homeowner typically increases civic engagement. It improves the physical and psychological health of the homeowners themselves. And there's a significant correlation to crime reduction in areas of higher homeownership. Now, for many borrowers, the biggest reason why they want to buy a home is because homeowners typically experience a significantly higher net worth than people that rent. These stats are from the last 60 years, and you can see that year over year, the difference between a renter and a homeowner who has a majority of their assets in their homes is quite significant. So we're hoping that, for you on the call today, we can help you guys make that jump into financial wealth creation for the foreseeable future by helping get you into homeownership. Now, we exist as an entity because, over 3 decades ago, our board realized that one of the biggest hurdles to homeownership was down payment and being able to afford the down payment itself. Now, there are many other reasons, like qualifying for a mortgage, debt, job security, not being in a position to settle down, not enough homes for sale, as well as other reasons why people don't buy a home. But hands down, the biggest barrier to homeownership is affording a down payment. And that's kind of why we exist, is to provide and help people overcome that hurdle to become homeowners. And the beauty of the Assist to Own product is that it's going to give significantly more assistance than our other programs to help bridge that gap again between being able to afford the mortgage, but not having the down payment and closing costs required to purchase a home. So why use the Assist to Own product? Well, it's a great program that's available to employees that are members of GSFA. And so these counties that are on the map here that are highlighted in gold reflect the membership for Golden State Finance Authority. If you or someone is an employee of the government of one of these gold counties, they are eligible to use this product. The program itself is going to provide up to 5.5% in assistance. It doesn't require a very high FICO score. We go all the way down to 640. It's not restricted to first-time home buyers, which means that if you currently own a property or if you've owned a property in the past, you can still qualify. And even though you have to be an employee of one of our member counties, you are able to buy anywhere in California, but we do hope that you stay in the county itself. And these things combined are going to make the program very flexible when it comes to qualification, which in turn will help more people qualify for the program and hopefully get more people into homes. So over the next few slides, we're going to go ahead and show you exactly how this assistance can work and helping you guys achieve the dream of homeownership. So we realize that one of the most important things our program needs to be is to be flexible. Every home buyer's financial situation is going to be different, which is why the flexibility is very important. Some borrowers might need help with down payment. Other borrowers that are using maybe a VA or a USDA loan might only need help with closing costs. So whether you need help with one, the other, or both, our programs are there to help. And to determine which option and which structure is best for you, you're going to want to reach out to a participating lender that'll help you determine, what the best scenario is for your situation to help you achieve your goals by using our programs. And so again, if you have your own savings, if you only need closing costs, our programs do provide a lot of flexibility in helping you guys to get the right financing for your specific situation. So now let's take a closer look at how the assistance we provide is structured. It's going to be broken down into two parts. The primary assistance we provide is going to be in the form of a second loan. It's going to be sized at 3 or 3.5% of your first mortgage. The beauty of our second loan is that it's going to be deferred. There's going to be no interest, no payments for the life of your mortgage, which means we don't impact your monthly obligations. We don't impact your debt situation. You only pay off that second once you finish paying off your first. So if you, don't refinance for 30 years and you pay off your first, the second will be due at the end of the 30 year. If you refinance, the second would be due when you refinance. In addition to that primary assistance, we will also provide up to 2% as gifts. Now, by definition, it's a gift. It doesn't have to be paid back. It'll be forgiven when your loan closes. And the gift can help you with both your down payment as well as your closing cost. Now, together, these two options will provide up to 5.5%. And it's up to you and your lender to determine, how much you need and what structure best fits your situation. Now, a reminder again, if you have any questions, there is a chat box on your webinar toolbar. You can type your questions in there, and I'll make sure that at the end of the call, we go through all of your questions at that time. So I know that the County of Shasta, falls in a more affordable area, but I wanted to give you this first example of where our program is going to max out. So in the event that you want to purchase a home that's, $862,000, you're going to need a down payment of about $30,000. Our program can provide up to $46,000 to assist you, which means we can cover the entire down payment, as well as leave you $16,000 to help you with your closing costs. Now, again, this is a maxed out example because we want to show you that if you're looking to buy a home that costs more than $860 and you don't have any kind of financial assistance on your own or any kind of savings, our program probably won't work for you. Now, on the other end of the spectrum, in Shasta County, the median home price for the County of Shasta is about $430,000. If you're buying that median priced home, you need about $15,000 in down payment. The program we provide can give you up to $23,000, which would provide you enough money for your down payment, as well as have $8,000 left over to help you with your closing costs. Now, chances are your transaction probably falls between these two extremes, but the bottom line is that our programs can provide enough funds to cover your entire down payment, as well as help you with your closing costs. And so you may be able to get into a home with little to no money out of pocket. As mentioned earlier, we are just, part of your financial structure for your home purchase. You are able to combine this program with other options like your own savings, maybe a gift from a family member, as well as other assistance programs that might be available in your area. So if you look at this little illustration here, combining other options with our program is going to help you lower your mortgage, which in turn will help you lower your monthly payments. And I have the example of the, $800,000 purchase on our slide now, but the size of the pie slices would be the same no matter what your purchase price is basically we want to re-emphasize that you are able to combine our program with other products to help you guys meet your goal of purchasing a home. So now I'm going to go over some quick guidelines on our program. But again, if you're confused or if it doesn't make sense, you don't have to worry. If you're at all interested in exploring homeownership, your next step and your best course of action would be to reach out to a participating lender to help you get that process started. They can break everything down for you and explain how the whole process is going to work and what you might qualify for. So all of our mortgages are 30-year fixed rate, fully amortizing loans. They are available in FHA, VA, USDA, HUD 184 tribal land loans, as well as conventional loans through Freddie Mac. For the most part, we primarily focus on purchase transactions. So basically for people looking to buy a home. However, we do have options available under our Freddie Mac program to help with refinances as well. The maximum first mortgage we can finance is going to be the conforming limit for 2026, which is $832,750. Now, if you are doing an FHA loan, that amount doesn't include your upfront mortgage insurance or the VA funding fee, so it can go up if you're doing an FHA or a VA loan. We don't have any purchase price limits. We simply have loan limit for your first. As far as eligible properties go, the program is going to be used for the purchase of an owner-occupied primary residence. It does allow for up to 4 units because that's still considered single family. It also allows for condos that are agency approved, planned unit developments, as well as manufactured housing. The following properties that are not allowed on our program are co-ops, investment properties, recreational, vacation, and second homes, because those are not considered owner-occupied as your primary. Our credit score requirements are very flexible on all loan types. The minimum credit score is going to be 640. There may be cases where it might be slightly higher. So for example, on a HUD 184 loan, it's going to be 660. And if you're going to be buying a manufactured home, it'll be 660 as well. Maximum debt to income ratio, which is a ratio comparing your monthly debt obligation to your monthly income. On FHA, VA, and USDA loans, that's going to be a 50% max DTI. However, if you happen to have a credit score below 660, your max DTI would be 45%. If you're purchasing a manufactured home, your max is 45%. For your HUD 184 loans, it's 43%. On conventional, it'll be 50% max DTI, unless you are doing multi-units, or if your FICO is below 680, you'd be capped at the 45% as well. Now, again, some of this information might be foreign to some of you on the call, but when you're ready to explore homeownership, your lender that you work with will be able to break everything down for you. So we work with, again, all loan types. Income limits may apply in some cases, but they are very generous. So for example, a lot of people assume that down payment programs have very restrictive income criteria, but I could show you right now that our income limits, if they apply, are pretty high. So for those of you doing VA or FHA loans, we don't have any limits. We follow whatever limits apply by the loan type, which I don't believe they have any either. For USDA loans, they will look at your household income, and those are available on the USDA website based on the county of purchase. And then if you're going conventional, Shasta County and many of these surrounding areas has an income limit of $196,560, which is pretty high. Now, on conventional loans, if you are going with that, there is going to be options where if you are lower income, below 80% of the area median, you would qualify for better interest rates and lower mortgage insurance and more flexible qualifying guidelines. So now that you know a little bit about our program, I want to kind of switch gears and talk about, why homeownership is important. Now, there are many hidden costs of waiting to buy a home, and I cannot predict what the future might hold for interest rates or home prices. What I can talk about is what's happened historically. So historically, if you wait to save for a down payment, what can happen typically is home prices go up. If you delay your purchase, you might lose the opportunity to increase and build equity. Rents continually go up. I don't think I've seen rents go down historically. And then if you are waiting for perfect rates, rates can fluctuate, and recently they've been going up. And so there are a lot of reasons that may encourage you to purchase sooner than later. And our programs are going to help you to do that by providing the financing for your down payment and your closing costs. Now, I realize that, every potential home buyer situation is going to be different. As I mentioned earlier, I can't predict the future, and I can't tell you what to do because I don't know your situation. I strongly encourage you, though, that, if you have any interest at all in buying a home now or in the foreseeable future, that you probably want to reach out to a lender to kind of get an idea of what you might qualify for and what you might have to look out for if you, need to qualify in the future. But bottom line, there are a lot of potential costs associated with waiting to purchase a home instead of buying it sooner. So if you think back on our example of a home purchase of $860,000 that required a down payment of 30 grand. If you were to save a very hefty $500 a month, it'd take you over 5 years to save enough just for the down payment. In that timeline, what you would see is that, home prices have gone up. Your monthly payment due to rates probably has gone up too because the rates have gone up. And you've lost out potentially building, over $150,000 in equity because you missed out on those 5 years of making payments and taking advantage of the balance of your loan going down and the prices of homes going up. Now, this math is based on a study and a forecast by the California Association of Realtors of about a 3.5% annual increase in the value of homes for this year. And so again, I'm not telling everyone on the call that you need to go buy a home right now. I'm just telling you that if you're thinking about buying a home, these are some things to consider if you're debating whether to wait or to buy now. Now, you don't have to take my word for it. I do want to wrap up today's call by introducing one of our beneficiaries of our program. His name is Christian Park. He is a county employee in the County of Tulare. He received over $13,000 in down payment assistance to help him with his home purchase. You can find his story as well as the experience and the stories of many others on our website. We do have a section where we kind of go through buyers' experiences with the product on buying a home. We have some information on lenders explaining the process. And you can find all of that again on our website on our YouTube channel. So what are your next steps? If you are, again, exploring possibly becoming a homeowner, I encourage you to check out our website. I dropped the website in the chat, but if you go there, it gives you a breakdown of our product, the Assist to Own program as part of our Platinum program. It's also going to show you some of our materials, give you some examples. A copy of the recording of today's presentation will be on there as well as a copy of the PowerPoint itself. But this is a great resource because it'll give you information on income limits based on the county where you want to buy. It'll help you locate a lender. And as far as lenders go, there's a couple ways you can go about it. You can click on a lender's website and you can locate a branch nearby you. You can also click on the link for branches by county to find a branch in your area if you want to drop into someone's office. And then we also have a link to top loan officers and which areas they service. Now, since COVID, most lenders, I'm not going to say all, but most lenders that operate in the state of California can lend anywhere. And these days, you can do everything through their web portal, by email and by phone. And so you don't need to physically go into an office, but if you like, these are some options for you to find an office in your area. And a lender would be your next step in finding out if you're qualified, and if so, how much you qualify for so you can start shopping for your home. Now, we are always here to help you as well. Our information is below. Our number is toll free. It's 855-740-8422. Our email is info@gsfahome.org. And our general website is www.gsfahome.org. So as I promised, we are now at the end of the official presentation. If you have any questions, please stick around. Questions can be typed into the webinar chat box, as well as there might be a Q&A box as well. You can type them in there, and I'm going to go ahead and start addressing those questions now. Question: does the program assist with lowering interest rates? So if you're looking to refinance, you can always go to our website. It's fully transparent. Under business resources, you can click on the online reservation system. From there, you can go ahead and go to the message center, and you can look at rates today for the Platinum program. That is the program that's specific for county employees. You're going to be looking under the assist to own, and these are the current rates. Now, if you don't want any assistance, we still offer pretty flexible rates on the mortgages. But again, our goal is to help with down payment and closing costs. And so the rate on your mortgage would affect your assistance. But they're all available online. So if you're looking to refinance, you just want to do a regular refinance, you can look at one of our options here, see if these rates work for your situation. Question: are there any additional assistance programs that are not compatible for GSFA? So when you reach out to your lender, they'll be able to determine, what programs might be compatible with our product. Basically, the way that it works on a high level is that our programs have to be in first and second position. So we provide the first mortgage and the second for down payment assistance, as well as a gift. Any program you want to combine with that would have to be in a subordinate position to one of the first two. So maybe your city, or maybe your county, or maybe your spouse's employer has a DPA program that is going to be in third, then yeah, for sure. But again, your lender would be a great point of contact to help confirm and verify that the program and the way that you're structuring it is allowable under the product. Question: do the GSFA Platinum program rates tend to be higher compared to other programs like CalHFA? That is a great question. And my typical answer is it depends on a day-to-day and what the buyers might qualify for. If you are working with an experienced loan officer, they'll be able to tell you, and run the numbers for you, which option is best for you. A lot of times people get caught up on rates, but they also don't realize that there are other costs associated with buying a home that would impact your monthly payment. And so it's really important that you do work with a knowledgeable loan officer to determine what product is best for you. But again, I encourage you, full disclosure, to go to CalHFA, to check out what their rates are to determine, if their program is a good fit for you. And so their rates are available to the public as well. And you can kind of compare them side by side to determine which is best. So for example, on their conventional loan today, if you are a standard borrower, they're at 6.5. On ours, we're at, interesting. We're at 6.5 as well. And so the rates today seem like they're pretty comparable, but then you have to determine, what kind of assistance you need and, how that might help you. And so your loan officer that you work with or the program will be able to determine, if it's a better fit. Sometimes our programs are better, sometimes their programs are better, and based on what you qualify for, that would determine which route you want to take. Question: are there other common assistance programs that partner well with GSFA in your experience? It's hard to say. We don't see actual loan files, and so we don't know if a buyer is combining our program with other products. What I can tell you though is that there's a website called Down Resources, and what they're good at doing is they're good at letting you know what programs are available in your area. And so you can use this as a resource to find out, what programs are available, where you want to buy, to see if there are programs that can be combined together with our product. Question: what if you have a City of Reading first-time homebuyers program that you started 15 years ago? Can you help switch that over to your program and have a second loan through you? So our programs are available for refinances. So if you are trying to refinance a house you already own, you can look at our rates for the refinances, which would be the rates for the conventional product. So we only offer refinances on a conventional program. Look at these rates to see if they make sense to refinance it. My guess is if you bought it 15 years ago, rates then were probably close to what we have here. I could be wrong, but that's a question that your lender can help you determine if it makes sense for you to refinance using our program. Question: I already own a piece of property. Could this program be used to purchase manufactured home to go on that land or to pay for a home to be built on the land? So we are only available to provide assistance for the financing of a purchase of a home. So we don't finance land and we don't finance construction. But if there's already a property you want to buy, then our program can be used for that. So I don't know if that would work on purchasing a manufactured home to go on your land. That would be a question that your lender can answer for you. But if it, qualifies as permanent financing, it would be an eligible way to use our program. All right. Well, it looks like we don't have any more questions. And so again, I want to thank everyone for taking time out today to join us to learn about our product. I really do hope that if you are, planning to make homeownership part of your future, that we are part of your journey. But again, the best way to figure out, if that's going to work is to reach out to a participating lender that will be your best point of contact to help you with the whole process. They will be knowledgeable not only on our products, but also other programs out there to help you determine, what the best course of action for you would be. And so again, if you have any questions after the call, our information is available on our website, as well as a recording of the training. And again, we thank you for your time. You guys have a great rest of your day and week.